How's it going, YouTube? My name is Technicam, and this is my first ever YouTube video. The goal of this channel is to break down daily and weekly market news, geopolitics, and investor sentiment to help you guys get calibrated to the current state of the stock market. I'm going to dive into some of the most relevant market-moving news from last week, and then we're going to take a look at the major indexes and some of my favorite stock chart setups that I'm very excited about. Spoiler alert, I am still super bullish despite all of the recent market noise. So, what are the main drivers behind this last week's elevated volatility? I've had so many of my friends asking me if the AI bubble is bursting, if they should sell their Bitcoin because Andrew Tate tweeted that it's headed to 25K.
Why crypto keeps going down, because all of you are analyzing the market saying, why is it going down? Who's selling? Who's the bear? I've looked at the angles on the chart and I don't know why it's still going down. Let me tell you why it's going down. It's going down because you think it won't. So everyone's max longing because the market's become super volatile. Most people have lost all of their money. So everyone's like, well, it can't go any lower. Let me just borrow some money and let me max long and make it all back in one trade. Let me tell you.
Asking me if they should harvest a kidney and get in line at Costco and buy one of those gold bars they're selling. Guys, take a deep breath and try to remember why the stock market has been ripping these last few months. On Friday, the stock market entered extreme fear territory, and the first thing that comes to my mind is a famous Warren Buffett quote. Be fearful when others are greedy, and be greedy when others are fearful. Basically, this translates to buy the frickin' dip, guys. There's a lot of cash on the sidelines waiting to be thrown at this quote-unquote most hated stock market rally, since a lot of people sold out at the April lows and are waiting for a pullback to get back in and buy stocks. The stock market started to sell off last week, namely because of a new round of tariff threats from Trump on China. China blindsided the rest of the world with increased restrictions on rare earth exports and introduced new licensing requirements for anyone trying to buy the equipment necessary for rare earth extraction and refinement. This is super important because China basically has a monopoly on global rare earth exports, which are used in literally everything important: iPhones, electric vehicles, semiconductors, that ring your girlfriend wants from Jared. All jokes aside, China is strong-arming the U.S. to gain leverage in tariff negotiations, causing Trump to hit back with renewed tariff threats over 100% and a potential ban on exports of critical software to China. Because of the possibility of new tariffs on Chinese goods and a potential ban on the exports of critical American software, whatever that means, we've got some selling pressure over the last handful of market sessions. This selling pressure in equities appeared to leak over in Bitcoin, where leveraged traders, meaning those who were buying Bitcoin with leverage or debt, were forced to sell, causing the largest ever single-day crypto liquidation event in history, caused the price of Bitcoin to fall sharply towards 105,000. I'm no crypto bro, but if you're asking me, I'd say this was a necessary shakeout of some of the excess in the market before we head higher. We also got a broad sell-off in regional banks this last week, very reminiscent of the Silicon Valley bank sell-off just a few years ago, when there was actually a very similar Bitcoin sell-off driven by rising interest rates. Certain regional banks may have been exposed to bad debt, spooking the markets further. Despite all the negative headlines that got baked into the stock market over the last handful of sessions, I strongly suggest that you just take a deep breath and remember that we are in the midst of an AI industrial revolution. Interest rates have begun a new cutting cycle. Don't fight the Fed is one of the oldest rules on Wall Street. And there's plenty of cash on the sidelines for investors to buy the dips while we continue up higher on the wall of worry, which is an old Wall Street saying that describes the tendency for the stock market to continue to rise despite a backdrop of negative economic, political, or social news. There is so much negative news out there recently, but many of this is just issues with potential resolutions. The government is already shut down but can reopen at any point. The U.S. and China could end up striking a trade deal or at least delaying any potential tariffs or export restrictions. This has actually become a popular trade strategy online referred to as the taco trade, meaning Trump always chickens out with regard to imposing tariffs. The market has many opportunities for a bounce-back rally in the coming few weeks. Now that we have the background for this week's market news, let's dive in, take a look at the charts, and get a little technical. I love technical analysis because I think it's an amazing way to analyze the negotiation of buyers and sellers in the market. Oftentimes, technical price action can precede and predict fundamental developments in a company. I personally love using moving averages, trend lines, candlestick analysis, and even Fibonacci numbers, for anyone that took statistics, to reveal what the market is thinking. Also, side note, as you'll see, I love using Robinhood Legend. I'm not affiliated, but I recommend checking it out on your desktop version of Robinhood if you haven't already. It's completely free for anyone with a Robinhood account, and it's a great tool for beginner technical analysts. For starters, let's look at the SPY. This is an ETF that represents the S&P 500 index, or the top 500 companies in the stock market. SPY is a great representation of the overall stock market. So here we have the 50-day moving average, the 200-day moving average, RSI, and the MACD. The 50-day average, which is the pink line here, is pretty much the most basic line of support from a technical moving average line standpoint. As you can see here, on October 10th, the SPY sold off dramatically here with China banning rare earth exports and basically tagging the 50-day moving average, not quite, but then retracing and coming back down here and touching the moving average perfectly before coming here and then making potentially what looks like a higher low. So, this looks very constructive from a technical standpoint. The 50-day moving average is basically the barometer for growth stocks or a growth economy. So for it to come back here and touch this perfectly, honestly, twice is great support. And we might have seen a lower bottom to create higher highs here. And honestly, back to all-time highs. If you see here the RSI, the Relative Strength Index, which is a measure of recent buying pressure or selling pressure with a bias towards recency, showing positive buying pressure here and very constructive chart pattern forming on the RSI to potentially head back higher as well here. And then the MACD, or the Moving Average Convergence Divergence, it's an indicator that measures momentum with a short-term exponential moving average overlaid with a longer-term exponential moving average. Shows that it has been in negative momentum territory here, with the MACD line being below the signal line in orange here. The histogram charts are starting to get smaller, and it looks like we have the MACD line potentially turning. So SPY looks pretty positive here, and as long as we stay above this 50-day moving average, I do not see any reason to be worried at all. If we were to close below, meaning we got the bottom of a red candle to keep to keep below here on a close for a daily candle, I would start to get worried here and think that honestly the 200-day moving average is in play down here at 600. That would be like a 10% sell-off in the stock market, which is a lot. But I don't see that playing out, honestly. I think as long as we contain support here at the 50-day moving average, the market looks pretty constructive here. And then if we actually go over here and take a look at the MAGS ETF, this is an ETF that represents the Magnificent Seven. If you don't know what the Magnificent Seven is, it's the top 7 stocks in the entire stock market, and they basically make up most of the S&P 500, most of the SPY that we just took a look at. It's NVIDIA, Google, Apple, Meta, Tesla, Amazon, and I don't know if I said Apple, but it's the 7 biggest technology companies in the world. And as you can see here, they had a similar move to SPY, but didn't even come down and touch the 50-day moving average. I actually have another line here called the 8 EMA. It's the 8 exponential moving average, which is another good moving average to look at for growth stocks. As you can see here, it couldn't close above. And then finally here today, it closes above the 8 EMA, regaining a super bullish momentum on the Magnificent Seven stocks. As you can see here, RSI is making higher lows and looks like maybe a higher high there. So that's a bullish divergence on RSI, it's called. And then MACD, it looks to be making smaller histograms, sloping back up towards the orange line here. So we could get a MACD crossover and see the MAGs start to take control of the market again, which we want to see because it is representative of the AI bubble right now, essentially. Let's go over here and take a look at Bitcoin. Bitcoin actually Not a very good looking chart. Not to be Andrew Tate here and call 25K. I think that's pretty ridiculous, and I don't know what merit Andrew Tate has to be able to talk about the predictive prices of Bitcoin. But I will say, when you look at this purple line here, which is the 200-day simple moving average, one of the biggest support lines for a company, closing below that is not ideal. And we did get two concurrent closes below with the purple line now to the 200-day moving average now turning into resistance. So we do want to see some buying pressure here, and we want to see a close above the 200-day moving average, because as long as we remain below that, I'm just not looking to buy Bitcoin here at all, and I would not think that that's a very good idea. We do look to be at low levels on the RSI, like support levels here. If you look down here at the relative strength, back in September, we did sell off to right here, similar selling pressure here. So that could be a support level. And the MACD is creating smaller histograms. The lines are heading downward, but potentially at a decelerating rate. So we might be seeing a turn in momentum here. I think it is, potentially a great turnaround spot if we start to see buyers step in. But I would not be buying until we got above that line, which is essentially 108.
Quick update on Bitcoin. As of Sunday afternoon, Bitcoin has actually rallied back above the 200-day moving average here. Looks like maybe Barron Trump and his buddies closed their shorts and started buying up Bitcoin again. So this is a very positive development, and Bitcoin really just needs to stay above that 200-day moving average level around 108,000 in order for us to remain bullish in the short term.
1,000 on Bitcoin. And then if we actually go over to gold here, gold has been the number one talk of the town here lately, skyrocketing from August to October here, basically absolutely no breaks. But we did see here on Friday, actually, one of the biggest red candles in terms of volume on this chart here, with a massive red hammer candle down here. This is not a good sign if you are a gold bug. It does look like there was a similar candle here with green continuation. But if we don't get a green candle here on Monday, we could start to see some selling pressure here that head back down to the 50-day moving average. I don't think that would be crazy, because as you can see, the RSI is off the charts, MACD off the charts. We were just in overextended territory, and so I wouldn't sell your kidney. I wouldn't sell your kidney. I wouldn't go to Costco and buy those gold bars for over $4,000. I don't know how many ounces there are. I think they're like 12 ounces maybe or something. That might be a crazy overstatement. I can't remember how much it is, but I do not think that is worth it at all. If we head over here to the Russell 2000s, the IWM, this is a representative index. This index represents the mid-cap to small-cap companies in the S&P 500. Not in the S&P 500, but in the stock market. As you can see here, it also had a massive sell-off. Didn't touch the 50-day moving average, but did come down towards it and then started to make higher lows, and it looks like we are going back up on the IWM. Momentum is actually looking negative, and RSI is looking negative, so we definitely need to see buyers step in, but it's still intact. The structure's still intact. We had a golden cross here. That's when the 50-day moving average goes above the 200-day moving average, showing that the last 50 days have been stronger than the last 200 days, essentially. It's a good signal for a shift towards positive momentum. We saw a golden cross here. So a retest of that 50-day moving average following a golden cross is pretty textbook. So I think we could head higher here on the IWM. I mean, if you zoom out, it's kind of a crazy chart. Looks like a massive cup and handle here if you're familiar with stock chart patterns, but I won't get into that right now. As you can see, there were previous highs. I mean, if you go back here to November 2021, the stock closed at 242.56, so we're still above that close. And then another 4 years later, we retested that high closing at around 240, 250, still above that in November 2024, 3 years later. And now another year later, we're retesting those highs. Again, we're still above them. We broke above them. And we got a green candle close here. We're still above the 242.50, 242, 242.50 level, and the 50-day moving average. So I think the IWM could continue to explode out to all-time highs.
As long as IWM holds above those previous high levels from over the last 5 years, I am very bullish on all of the small to mid cap growth stocks in the market. When I refer to small and mid cap growth stocks, I really mean 100 million or so to 20 billion in market cap. That's not necessarily the definition of small and mid cap stocks, but that's my personal criteria for them when reviewing stocks that I like for potential growth. And the first area I actually want to take a look at is American rare earth and critical mineral stocks. The most popular one probably being MP Materials, ticker symbol MP. This stock has gone on a pretty crazy run this year, up over a couple 100% since the Department of Defense and Apple actually took massive stakes in the company. This is the only vertically integrated rare earth company in the United States that is vertically integrated and across the entire value chain of rare earths, from extraction to refinement to the actual sale of them. So it's really set up well here when China is banning their rare earth exports, when they have a monopoly on these rare earths that we use in all of these important things. So we are turning to our own sources at home and investing a ton of capital in them. MP being at the very center of this. And when you look at the chart, actually, it looks fantastic. We are still above the 50-day moving average, as I have compared in my other charts. But also look at this double top here. Back September and August, it's retesting that level that was a previous resistance level, and potentially now flipping it to support here with this green doji candle, it's called. This one, you have the open and the close of a candle very close together, and then long wicks on either side showing buyers and sellers don't really know what direction we're going in. Perfect timing to be hitting that level right here at a previous resistance level. We also have the RSI still remain in bullish divergence. I mean, if I draw this line here from the bottom here and just connect them, I mean, it looks like we're kind of getting to a support level here on the RSI. I mean, if we go down below that, I would actually start to get worried in terms of momentum picking up for negative selling pressure. And then the MACD, obviously, it is, we're creating smaller green histogram bars headed downwards, but still positive, so I'm not too worried about that. If we take a look over here at ticker symbol UAMY. This is United States Antimony. This is one of my personal favorite stocks that I've been in recently. This is actually not a rare earth company. It is a critical mineral company. So the difference being these are minerals deemed critical by the U.S. government for certain use cases. They're mainly in antimony, as the name suggests, United States Antimony, which is a critical mineral used in batteries, semiconductors, night vision, ammunition. This is all stuff that we've been giving away to Ukraine too, and we're very, very low on supplies. So this being a critical mineral, it is at the top of the list for what the government needs and is probably going to continue to invest in. They recently received a $250 million contract from the Department of Defense. So they're already getting some pretty insane contracts from the government here. And then from a technical standpoint, obviously it just went absolutely parabolic here. From $6 October 1st to just 2 weeks later being $20 a share. So naturally it's going to sell off from that parabolic move. At what point do we get to oversold territory? The RSI is still in a bullish sequence. MACD is still positive, although facing down. We're still kind of high above the 50-day moving average. So when you're in this no man's territory, something I like to use is the Fibonacci retracement tool. It's super cool. You take from the swing low of a move and go to a swing high, and then we can extend it out. Oh, sorry about that. And you can extend it out, but basically this level that it's at right now and experiencing a doji candle similar to MP is called the 0618 Fibonacci support level. And this is actually the golden Fibonacci number for anyone that took advanced statistics in high school or college. It's just a number where we see patterns in life, flower petals or something like that. I haven't taken statistics in a while, but I know that these numbers come up all over the world, just randomly throughout life. And they also have their applications in terms of a stock chart and price action. So it's super cool. I've been doing these for a while, and I've noticed that this level here around the 0618 does tend to be when we start to see a reversal. We did see 3 large red candles here with a doji green candle here. So right on the 618, could be a coincidence. I don't really think so. That's why I used them in my technical analysis. So I think this company, being at the center of everything with critical minerals in the United States, and it's also just a great hedge against what's going on with China. Even if we create a deal with China, guys, we need to invest in our own critical mineral infrastructure. These trade war negotiations could persist for a long time past Trump. So, we need to invest in this industry ourselves here. And this company, I think, really is at the forefront of it all. So definitely recommend taking a look at it if you have not before. Moving on. Oh, I have another chart for it. Whoops. Moving on to Hims and Hers Health. This has been a stock that I've been watching very, very closely over the last year or two. I've actually kind of gone ahead and done my trendline charting of this stock. This stock is at the center of healthcare right now, and there is so much going on in the healthcare sector with Trump, going after big pharma, RFK going after big pharma companies like Eli Lilly, Novo Nordisk, making them give in and charge lower prices, most favored nation prices. No longer can they charge the price of Ozempic. They can't charge more than they can in the United Kingdom or elsewhere in the world. So companies are being forced to go direct to consumer and sell cheap, and Hims is basically at the forefront of that. They sell generics of Ozempic, of Wegovy, technically, hair loss products, sex ed products, birth control products, testosterone replacement therapy, menopause and hormonal replacement therapy for women. They've done blood testing kits that they've launched recently so you can get your biomarkers done, send it back, see what you need. Guys, this company is at the forefront of telehealth and peptides, and they're here in the United States. They've got good lobbying with the Trump administration. They donated to his inauguration. They are at the center of what Trump's trying to do at Trump RX. And just yesterday, actually on Friday, I should say, we just saw a terrible sell-off. Basically on, I think it was on the October 15th, Hims released their hormonal replacement therapy, and the stock broke out of a several month long channel, but it came back down after the Hims CEO quoted a tweet saying the Hims squeeze is here with the eyes emoji, and I'll put that up on the screen if you can see it. But the very next day, the Hims CEO had a pre-planned stock sale for $11 million worth of stock, and the market was already in full sale mode, so Hims stock absolutely tanked back below the trendline channel and back below the 50-day moving average. Actually, it closed below that. That is not bullish at all. So I think it is realistic to say that we do head to the lower side of this channel and potentially where there is a convergence of the 200-day moving average. If you look back in time, the stock loves the 200-day moving average as a reversal zone right here, just recently back in early September, back here in April, and again, even right here in September of 2024. So, I mean, look at the rallies it went on immediately after testing those levels from $14 to $72 in just a few months, and then again from 25 to 66 in just another few months. And it's basically done that again here, another 50% just since about a month ago. And so if we come back here and we, kind of complete this symmetrical triangle pattern with a test off the 200, I mean, with peptides gaining momentum and Trump's Trump RX program gaining traction and potentially him being able to lean into that program, I think we could see a crazy movement on this stock. This stock actually has 40% short interest, guys. It's one of the most shorted stocks in the entire stock market, and yet they are increasing their margins, their revenue. They're growing verticals every single day. They have this flywheel effect where they're able to sell to across different categories. This one is just awesome. I will say though, negative technicals, guys, below the 50-day moving average. I want to see us get back above that. I want to see us get back above that level. RSI needs to get a higher low going here, guys. This is negative. Momentum is negative on the MACD. So if I were to get in, I would look for an entry around that purple line. If you're able to chart this on Robinhood Legend or another platform, just look for that 200-day moving average. That would be a great entry point on HIMS, as we've seen time and time again. So definitely recommend that one. Open Door Technologies, guys. This one is the new GameStop, essentially, in the stock market. It is a technology company that helps people with buying and selling homes. Obviously, a terrible market to be in right now. That's why if you zoom out, I mean, the stock's sold off like so much since rates have been going up over the last few years. But we're in a rate cutting cycle now. So, this being the new meme stock, we've recently seen an explosion of retail investor sentiment. The stock has gone from less than $1 to $10 in just a few months. It's actually pretty wild, guys. And here we are coming to test the 50-day moving average right after a golden cross where the 50-day moving average crossed above the 200-day moving average, a very, very big technical indicator, very positive indicator. And now we're coming down here and we're testing the 50-day moving average after that, guys. That is super bullish. I really think this 50-day moving average is going to present an excellent buying opportunity, guys. As you can see here, RSI still positive. I'll throw the MACD on. Still super negative. Can't really say it's getting better, but I mean, this looks like it's flattening out on the RSI, and that 50-day moving average is the perfect turnaround spot. Next, we have Oscar Health, guys. This is one I love right now. It is a bit dependent on what happens with the government shutdown right now. So Oscar Health is a technology company that helps with ACA plans or Affordable Care Act plans and getting Affordable Care Act coverage, which is the center of the government shutdown right now. Trump and the Republican administration wants to end these ACA subsidies. Democrats want to extend them to some degree, and that's why they're holding out and they're unable to agree on a new spending bill. This stock has been absolutely crushed since its IPO pretty much back here in 2021, but even more recently it started selling off when Trump won the election and started talking about how much he wants to get rid of ACA subsidies, which is 90% of their revenue, so understandably why it sold off. That being said, guys, I think we see some sort of extension here, whether it be, very temporary or even longer at some point. The Republicans are going to have to give in to the Democrats, who have been seen as having no spine. So I think that they just got to hold out no matter what to gain some sort of credibility back, because they look super weak right now. They've just given in to the Republicans and the Trump administration on pretty much everything from my point of view. So I think that they plan to hold out here and get some sort of extension. Any kind of extension would be super bullish for Oscar Health, guys. By the way, Joshua Kushner is a co-founder of Oscar Health. That is Jared Kushner's brother. Jared Kushner is the husband of Ivanka Trump. He was actually a big part of the Hamas peace deal that was brokered the other day. Guys, this is the guy at the center of everything, the Kushners, this family. I would be willing to bet if anyone were to benefit from whatever Trump decides to do with this government shutdown, it's the Kushner family and Joshua Kushner. Also, from a technical perspective, we have a golden cross here where we are coming up and retesting the 50-day moving average after that golden cross. This is a super bullish technical pattern forming, and I don't know to what degree we'll get ACA extensions, but any kind of extension should cause this stock to rally towards, honestly, I mean, that's a major resistance level right here around that $23 level. If we can get above that, 30s in play, I guess. So definitely want to watch, guys. I really like this play as another healthcare play to HIMS. HIMS is a non-insurance play. This is a pure insurance play. So they're very different, although they're both in the healthcare sector. That's why I think they're kind of good to own both. HIMS is a big play on no insurance, and Oscar captures the other side of that. Another stock I like is UiPath. They do the AI integration robotics. The stock has been gaining a ton of positive momentum lately online. Look at this golden cross that literally formed here on Friday. It's beautiful. And we're retracing very nicely to previous highs here on the chart. So, yeah, look at that. Perfect. Right after a golden cross, retesting the previous highs, maybe flipping it to support. We need a green candle here, but this stock looks really good. They do AI integration and robotics. They have partnerships with OpenAI, Google, Microsoft, Meta. Guys, this company is at the center of it all. RSI continues to be bullish divergence. Momentum remains positive, although it looks like the MACD is about to cross over. I think that if we're going to turn around at any point, guys, it's right here for UiPath. There's so much sentiment picking up online for this stock. I've been watching YouTube videos about it, reading about it on X, checking it out on StockTwits. Strongly recommend it, guys. And my last stock here that I really like is Wheels Up. It is a private jet subscription service. They were recently as in a few years back, potentially going bankrupt. Delta Airlines came in, bought them up, and bailed them out. So this stock had been getting absolutely crushed for so long, just not making any money. But as you see here, we crossed above the 200-day moving average definitively for the first time since last July. Golden cross. We've come back down here, crossed through the 50-day moving average, not great. And now we're here at the 200-day moving average with the little doji candle. It's perfect for bouncing off of support. RSI is flattening. Momentum is, let me throw it on. Momentum is still negative, but I really like, here, we'll do the Fibonacci number as well. Yeah, look at this, guys. We got a golden cross. We're retesting the 200-day moving average. We're retesting the 200-day moving average here. We zoom in. And we are at the, let me move this down a little bit. And we were at the 764 Fibonacci number. So we were oversold. If you don't know anything about Wheels Up, the one thing I like about this play is that it is a potential short squeeze candidate. It's not necessarily that I'm watching this for any fundamental reasons, other than the fact that I read an article the other day that 80% of the shares of this company, I believe that is the number, is locked up by insiders. So they cannot sell any of those shares until May. So this stock has a lot of short interest, and there are lowering interest rates. And technically, I really like the support that it may have found here. So don't be surprised if the market starts to rally up that we see a short squeeze on Wheels Up here. Thank you so much, guys, if you stayed until the end of the video. This weekly recap is something I would really like to start doing regularly. So if you could leave a like, a comment, subscribe, it would really mean the world. Obviously, none of the material in this video is financial advice, and you should do your own research and due diligence before buying stock in a company. Hopefully the week will be positive in the markets like the charts suggest. Let me know what you guys want to see in future videos down below. Let's make some money, and I'll see you next weekend.